This video is going to show you how I save 60% on leasing this car, which is an electric car, through my company. Watch this. Hi everyone, my name is Razak, Chartered Accountant and Tax Advisor. I'm going to run through how we got the 60% discount on getting the business lease for that beautiful Audi outside through my limited company. I'm going to show you how. When you get a business lease through a company, more efficient way of doing it is you can offset the rental payment straight through the company. You can also claim 50% of the VAT back if you're VAT registered. Really important. You can also put your insurance through. That's your car insurance. You can also make sure your running cost of the vehicle, depending on how you do it. I included the rental wear and tear in the rental, but you could also claim car servicing, and more really importantly, if you do it smartly, you can claim the charging cost of the vehicle. When you're getting an electric vehicle, the reason why this is all really big, and it can save me in this case 60% of my running costs that I would have had to pay in my own name or pay a huge tax bill through the company. And currently the tax actually we're putting this through, what we call car tax, we call benefit in kind, is 3% as we speak in April 2025 onwards. It's relatively cheap to do this because of all the savings of corporation tax, VAT, because you can put all this through. Whereas if I went and got a petrol diesel car, right, because the benefit in kind is so high, it could be up to 37% to 39%, depending on what car I've got. It makes it not viable to put it through, and therefore all of these costs you wouldn't put through, and you were just claiming a mileage rate. So this is the difference. So if I'm saving a whopping 60%, it is madness not getting one of these. In my case, it actually saved best part of £7,500, 7.5k, plus I've got a car worth £55,000, because that's how much that Audi's worth. So I'm controlling that asset, but I'm doing it smarter, because when I go over here, I buy it in my own name or get it leased in my own name, which everyone probably has done before. I would have to pay corporation tax on profits, which is 19% to 26.5%, not to scare you. And I would have to pay personal tax if I'm doing dividends, for example. Just whack it over here, I know it's a bit messy, which is anything between 8.75% all the way up to 39.35%. That's over 50% of my money. That's going to be greater than 50% of the money that I've made in profits. So changing this and getting advice, getting the right vehicle in the right structure with the right advice, difference maker. 60%, and I'll drop the lid because that's how shocked I am with the saving. I hope this makes sense, and this is what I go on about, working pre-tax versus post-tax over here. Pre-tax, this scenario, post-tax, and this is where people are losing so much. They're losing over 50% of their money just on the car. And this is the difference maker if you get the right advice based on the current rules, and that's where your good tax advisor accountant's going to come, and they're going to start saving you money because now you're working pre rather than post. If there's any other stuff that you're not sure, please drop it in the comments below. Give us a thumbs up, and hopefully you can share more value like this across all our socials. Thank you so much for watching, and hope you got value.